Australia's housing market downturn is worsening, with prices declining in June and July by the most since December 2022. It comes as rising interest rates and tax changes weigh on buyer demand. So joining us now is Anne Flaherty, who's the senior economist at REA Group. And really great to have you with us. So largely this is by design, right? Is this sort of the extent of declines that you would have expected given some of the tax changes and the burden of rate changes as well?
Look, I think that it's certainly the impact of higher interest rates that have limited home prices and are contributing to the falls. Understanding the impacts of the tax changes, I think, is still going to take a bit more time. It does seem clear that investors have pulled back, which has reduced overall buyer demand. But I do think that the extent to which this impacts prices over the coming months and into next year is still unfolding.
Where do you see the plateau? Because certainly there is almost a sense of, I don't want to say panic, but sentiment has been really hard hit in capitals like here in Sydney, particularly in sort of the inner city and in eastern suburbs and some of the suburbs that have seen some of the biggest price gains.
Yeah, look, I do think there is a lot of panic out there, and we have been seeing some reasonably substantial monthly falls. So in Sydney, home prices were down more than any other capital city in the country at 0.6% over the month. But I think that in terms of where the floor is, that remains to be seen. That there is a chance that we could have interest rates increased again before the end of the year. And if that does happen, that could increase the rate of home price falls. But also, at the moment, there's still a lot of uncertainty. And I think that we're likely to continue to see prices fall through to the end of the year. Whether those falls continue into next year as well, I think it's going to have a lot to do with the total stock of homes on the market, what happens with interest rates and inflation, and of course, what the final fallout of the budget ends up being once this sort of panic starts to subside a bit.
Sticky inflation, of course, remains a key concern for the RBA, but now there is a concern that they're getting into this situation where we're going to see household confidence being impacted so much by the property market. Do you think this is going to be the next conundrum for the RBA and potentially prompt, as Bloomberg Economics is predicting, a sooner than expected cycle of easing?
Well, one of the reasons why we've seen such short property price downturns in recent years is to do with the fact that interest rates have been decreased, which has led to that recovery in home prices. We're in a situation now where inflation looks like it's going to be high for quite some time. So even if we see interest rates hold steady, we're not looking at rates coming down over the short term. So I think that buyer budgets are still going to be constrained for quite some time. Of course, where interest rates sit has a very strong impact on how much buyers can borrow. So until we do see interest rates start to come down, or perhaps see a significant slowdown in homes being listed for sale, I think that there's certainly capacity for further house price falls.
We've already started to see the flow-on impact when it comes to consumer-facing stocks, for example. There's real concerns that that's going to eat into that part of earnings season. Have you started to see the pass-through in the data on consumer confidence, household spending, retail sales and the like?
Look, consumer sentiment has been quite weak. However, we actually did see a slight improvement in terms of that overall consumer confidence in June. So I think that as far as time to buy a dwelling goes, on realestate.com, we are still seeing a lot of buyers monitoring the market. So there's still a lot of interest out there. But I think that what we're seeing is that transaction activity has slowed down. And a part of that is to do with fewer investors in the market, but it's also to do with buyers like first home buyers, upsizers, biding their time until prices fall further when they might get a better deal.
What's also interesting is at the moment you're seeing this real mismatch in the market, right? Prices are falling, sellers' expectations are not being met, but buyers' expectations perhaps are not being met either because we're seeing a lot of unsold housing stock. When it comes to the point of these tax changes, which is to drive greater housing affordability, to kind of, dispense that housing across a broader sector as well as to add rental capacity, do you see that working?
Well, in terms of affordability, lower home prices do make things more affordable. In terms of rental capacity, though, I doubt that this is going to be the outcome. I think that new dwellings, which the government is hoping that investors flock to new dwellings, they make up a very small share of the total number of dwellings out there. And actually, the majority of new housing being delivered is extremely expensive new apartment developments and house and land packages in outer areas. So in terms of adding the supply of affordable rental properties in those inner and middle ring suburbs, we're not seeing much of that at the moment. And with this decrease in incentives for investors, we're likely to see that those kinds of rental properties become increasingly constrained and rental vacancy rates tighten, which could push rents even higher than they are now.
Taking into account what market expectations are of what the RBA does by December, which at the moment I think is a sort of 50-50 chance of one further hike by the end of the year, where do you see home prices potentially stabilising?
Look, we think it's going to come down to how long it takes for these impacts to flow through. And I think it's also going to really depend on the market. What we've been seeing is a bit of a different trend in terms of those properties that are at the more affordable end, those properties in particular that come in between in the price thresholds that are available through the government's 5% home deposit scheme. They are more resilient. Some of those areas are still continuing to record growth, whereas the more expensive suburbs where people typically have to take out larger mortgages that make them more susceptible to higher interest rates, those are the areas that have been seeing the stronger falls and are likely to see falling home prices for longer.
And really great to have you with us, Anne Flaherty, who's the Senior Economist at REA Group. We'll have more on Australia Ahead. That's every Tuesday at 10:40am if you're watching in Sydney, 8:40am if you're catching us in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, delving into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify or Bloomberg.com. More ahead here on the Asia Trade. This is Bloomberg.